Hey, welcome to the Closing Beat, everybody. Happy Thursday. Hope you're having a great day here so far, despite the market performance for the day. Hey, welcome to the Closing Beat. This is our little short show we do every day. We're financial advisors here at Jazz Wealth. If your life's a little financially complicated or you don't know how to invest, just don't like it, you just sort of need help with that, I hope you'll check us out at Jazz Wealth. We work with all size investors. Doesn't matter if you're starting with your first $100 or you've got hundreds of thousands of dollars, whatever you may have. If you need help, I hope you'll keep us in mind here at Jazz Wealth. We keep things sort of lighthearted. You'll never see me in a suit and tie. I just don't believe in that. No reason that I need to try to impress you that somehow I'm better than you. I don't like the typical financial advisory sort of back and forth with the leather wingback chairs and all of that. So we try to scale everything down, make it a lot easier here. So much so that we're building a TV studio as our office. So the whole thing eventually will be done where our office is essentially what you see here. And actually, I work right back there on that set. We call it Set 2J. And another thing we do to just have some fun is we play a game. It's called Guess the Dow. You can go to the website, the bottom right-hand corner of your screen, jazzwealth.com/guessthedow, and pick a number. Where do you think the Dow is going to close next week? If you're right, you're closest without going over, we'll send you $100. It'll be a gift card. And if you're one of our customers, we'll just credit your account if you'd like. You get that choice. You could certainly take the gift card if you like. No strings attached. Like I say this every day. This is not like a marketing pitch or anything. It's just to get you to play a game, have some fun. It's summertime. The markets tend to be a little bit quieter. Well, today wasn't too quiet of a day. Today was like the first real negative response to earnings. Generally, earnings season so far has been pretty good. We're about a third of the way through it in terms of the number of S&P companies that have reported. And you had the Dow lower by 128 today, 15 on the S&P, and 82 on the NASDAQ. You know, the main focus today to start the day was some of the data that came out. We've been mentioning for the last couple of days about the ECB, the European Central Bank. It's the equivalent to our Fed, but over there. And they were supposed to cut their interest rates, and they decided not to. Well, right as that was happening, you saw our futures market start to fall early this morning. And so that makes people think, hey, maybe the Fed won't cut rates, right? We thought they were going to cut. They didn't cut. Said some really nice things about supporting their economy over there and their market in general. So now people are going, wait, maybe the Fed's not going to cut rates. Add to that, you had initial jobless claims come in today. They were better than expected. We're sitting near like record lows here, and we hit 3-month lows today. So that number's even better than expected. Now all of a sudden, you get this last second curveball for people going, whoa, maybe the Fed's just not going to cut rates here. Maybe everything's just going to stay the same. Well, you've seen some of the comments from JP Morgan, now Goldman Sachs, saying, hey, you saw what happened today when we found out that people were thinking that the Fed wasn't going to cut rates? Well, if they don't actually cut rates, you're going to see a lot more of that to the downside. A lot of people think the stock market's going to take a bit of a hit if we don't see this rate cut. There's been this big buildup, right? Everybody's all like, yeah, we're going to cut rates. It's going to be great here. And now all of a sudden, they're just not going to do it, right? So it's going to be, well, potentially a little bit of negative response there in the meantime. Add to that, the economic data says basically everything's all good. So let's go over to the charts here and take a look. You got the S&P 500 down just a little bit today. The Dow was down yesterday, so that's day 2 for the Dow. Remember, it was negative yesterday. Everybody else was positive. Still floating near highs, everything looking pretty good. Same on the S&P. We're basically sitting near highs. Just a little bit of a negative day there. The NASDAQ took one of the bigger hits today on the reversal from a lot of the tech names, and that's probably going to continue into tomorrow based on what you're seeing after hours. It depends. I mean, it's sort of a mixed bag. We'll go over that. Actually, let's just go over it now. Before I do that, though, the Russell 2000 reversing course yesterday. It was so exciting. It was like, yes, this is a good reversal day. You never like to see a really strong move or a really negative move immediately erased, right? You don't want to see that immediate sort of, we call it a 180, just a stock or a market does a 180 all in a 2-day time period. That's not really a good sign. The good news is today it didn't give up all of it, but the Russell continues to be this choppy, messy, just like, brat of a child area of the market. And so that's what we're dealing with here. After hours, you got some news here from Apple. Remember yesterday we talked about the rumor that they were going to buy Intel's smartphone modem unit. Well, today, right as the market closed, the news hit that they were in fact going to buy part of that or the majority stake in that. I think it's around $1 billion. That news is still sort of developing. I don't think it means that they're going to absorb the entire thing. It means that they're going to take over a part of that division, most likely a very big controlling stake in it, employees and everything like that. Apple wants 5G. They couldn't get it. Remember, they went to Well, they went to Intel and they were like, hey, work this out. We can't work with Qualcomm. We just don't get along. We're suing each other. It wasn't good. Intel said, we got this, right? They went and started trying to make this 5G product, the chip that they could put in the phone. Intel ultimately came back and said, we can't. We just can't compete. We can't figure it out. And that was literally the day that Apple said, you know what? Qualcomm, you're not so bad. We'll work with you. We'll be all right. We're going to be just fine. We're going to drop a lawsuit. We're going to give you a bunch of money and just pretend this never happened. It's because they had to, right? They need that 5G, and right now they can't get it. So their alternative is they say, let's just buy this part of Intel here. And so that's the news after hours there as well. You got Alphabet reporting earnings after hours. We'll cover this again tomorrow. But you got Alphabet reporting earnings. They beat on earnings. Their overall margin went to 24% from what I could tell here, from 22.6. Remember, last quarter was a big revenue miss. They sort of had to do good this quarter. So this stock doing well on that news. Amazon not doing too well here. Shares lower after hours. They missed on earnings. They're anticipating higher costs. They had a lot of positive things so far from what I've seen about this sort of rapid shipping. Remember, it's like $800 million they're spending into this next day / same day shipping. Do we really care? Like, do you mind if it takes 2 days to get something? When did we need to order something and get it like same day? Like, I have a headache. I'm going to order some ibuprofen. There's Amazon, right? They're trying to do that. I mean, it's commendable, but seriously, like, if it's really hurting the bottom line, do we need to bother with this? Anyways, Amazon missed on earnings, shares lower there. Starbucks was a good one after hours here. They reported earnings, beat expectations, beat on revenue. Stock's already a little bit extended. So I forgot to load it. I'm sorry, guys. I didn't put the thing on here. I like to be able to see my after hours, and I didn't pull it up. Got a little bit slack on that. Anyways, you got the stock trading around 96.29, so that's going to be new highs, about 6% after hours here. Nice. I mean, overall, just a good beat. Guidance was higher as well. Comp store sales up 6%. So overall, Starbucks is killing it. They get a lot of it from my daughter. I can tell you that. She's there every single day. Every day. She don't spend her money on much. She's like super, super, super cheap. But when she spends it at Starbucks. Anyways, Intel. Also reporting earnings, they beat on revenue. Stocks higher by basically 6%, trading around $55. That's going to be up here, starting to fill the gap from the prior earnings, remember, which wasn't very good. They, like I said, beat on earnings, beat on revenue, and they guided higher as well. That's a pretty strong move for that one. And remember, the semiconductors in general, I'm sort of bouncing around here, I'm sorry. Semiconductors in general, a little bit extended in the short term. This is going to help them stay above this resistance area we've been talking about. Today, semiconductors pulled back, profit taking, right? It's not that anything's wrong or it's a bad sector all of a sudden. Just a little bit of profit taking in the short term. What goes up quickly can't stay up there forever. It's going to get run exhausted, be a little bit tired. And so I think that's okay. The support from Intel tomorrow may be able to kind of hold things up in line there. That's really your headline news to get started here for the day. Earnings-wise, remember, they set the bar really low. So far, we're beating that. The average response, the average sort of change from the stock on the day that they report earnings is 1.3%. So overall, it's very positive. It's not going to stay that way, by the way. It very rarely stays over 1%. But overall, very positive. So things looking good for that one only because we lowered the bar. Analysts and everybody, Wall Street, set your expectations lower so you wouldn't be disappointed. They did an amazing job on that. Like I said earlier, we got about a third of the S&P 500, which has reported so far. 75% of them have beat on earnings versus the average of about 60%, and 64% have beat on revenue. Small downticks there after today, but the average there is about 56%. So not bad, right? Not looking too bad overall there. Let's go over to the individual sectors. We talked about the semiconductors already. That's been sort of the exciting area and for the week so far. Just began its small little pullback here. Nothing crazy, a little extended in the short term. You need this. You welcome this. You also know that that's going to hurt the market in the short term. If this continues to pull back, it is going to pull back the S&P. It's going to be a little bit of pressure there across the board. And so you welcome it. It's not that this is sitting at lows and breaking down and looking nasty. Just got a little ahead of itself, looking to take a little bit of a break. And if the market does the same, you would be okay with that. I say it like that, so it make you, is that sort of like hypnotic? Communication services, lower, though not so bad, right? A little bit of a punch today because of Facebook. Facebook makes up like 20% of this area. Really, this communication services is essentially Facebook and Alphabet. That's really all it is. Well, Facebook lost about 2% today. Yesterday we talked about this. They beat on earnings, beat on revenue. They did go ahead and announce that the antitrust investigation creates a little uncertainty. Because that creates a little uncertainty in how much money this could cost, stock's a little bit wiggly today. That's a technical term, by the way. And then we already talked about Alphabet reporting earnings and beating on earnings there. Today it was a little bit lower, so that hurt the communication services. Between Alphabet, both classes of shares, and Facebook, that's 44% of the XLC, your entire sector. So really, if you want to know communication services, you just kind of look at those 2/3 names if you look at both classes of Alphabet, and you get what you want there. All right, utilities. This is your biggest mover week over week. Unfortunately, it's to the downside. So utilities continuing to see money move out of the sector and move where? If you've been watching for a few days, you know, moving over to financials, right? So you see that sort of sector rotation from the utilities, from the consumer staples. XLP you could use if you want to look at that. Consumer staples, money moving out of there, volume staying steady, headed over to financials. Now, financials in general have had a good move. It's been pretty nice here in the short term. It's choppy. It's still messy. It's kind of like the Russell. People aren't sure if they want to be a part of this yet. Money moves in slowly. Eventually, the radar kicks in for everybody, and they go, hey, that's an undervalued sector, undervalued area to be. I like it. And so you'll see money moving in there slowly, as it already is. Basic materials got a nice sort of a pattern there. I don't know what to say there. This has the most amount of stocks over the 50-day moving average. So still an undervalued area too, starting to see a little bit of money come into it. And I'll move over to home builders. I know I'm using all the same ETF today, same product, but it's just easy to remember. Home builders, XHB is the symbol I use for that. Nice broad-based rally there. Anytime you see a broad-based rally in a sector, you like to go look for different names that are, sticking out as nice and strong, good reversals or anything. I found KB Homes. KBH is the symbol there. It's just a nice reversal. Remember how I said you don't like to see this immediate reversal? If you're long and you bought the stock or you own it in your portfolio, yeah, you're happy to see that, right? If you bet on it going down, you're not happy to see that. This is the exact opposite of what we're talking about there on the Russell. Anyways, KB Homes moving back to prior highs there, 2.5% on the day. Not too bad. You can look through the rest of the names in there if you want to just go through some of the bigger names. Lennar, nice little recovery off lows. That's also 2%. I think Beazer did okay today, smaller group here, 3% coming off lows there after getting rather beaten up. All right, if we go over to the S&P 500, we got a small downtick in the number of stocks above the 50-day moving average. Down 5% overnight to be exact. 75% of them are over the 50-day moving average. About 37% of the S&P 500 is within 5% of hitting all-time highs. It's just a fancy way of saying everything is basically hovering near highs, looking pretty good. We mentioned already that the basic materials had the most of them, 93%, 93 or 94% of the basic materials are over the 50-day in an undervalued sector. What's that tell you, right? If most of the stocks are over the 50-day, but that's not a leading sector, right? Why are we not talking about this? Because it's not sitting at highs. I don't like share these numbers with you just to say I know how to find numbers. The idea behind this is for you to go, all right, if basic materials, this might be your lesson of the day right here. Basic materials are, I'm going to go out here. There you go. Rather undervalued sector getting a little more attention here. From a fundamental standpoint, it's a little undervalued. Technically, it's starting to improve, right? If most of the stocks now are above the 50-day moving average, but it's not screaming like consumer staples were, consumer discretionary, REITs at one point, it's not screaming at highs making these huge uptrends. What's that tell you? It tells you that more and more money is sneaking into this area, likely coming from utilities and REITs and things like that, to take their chances on a more discounted area. This happens when the stock market itself is sitting near all-time highs. Think about it. It's all human emotion. You go, you want me to buy this? Right? We're sitting up here at highs. Everybody and their mother's saying, please pull back, stock market. Please pull back. We're actually building into the dojo, which is what you're looking at here, the ability for me to set an alert based on price for you. Right? So if the customer says, I'm willing to invest more, but not until we fall at least 5%, how can I track that for everybody? So if you're wanting to say, wait for 5%, we're building that in the system here so that I can alert you when that happens. I can also be alerted and say, hey, you said 5%. Are you interested in kind of putting some money to work? You go, yes. All right, we get it done. Anyways, the short story is everybody and their mother's going, I want this market to pull back. If I can't get the markets to pull back, where do I go? I go to undervalued areas that are starting to show some promise. You got basic materials, you got financials we've been talking about for really months now. And so that's what's going on there. You got tech stocks. Now, tech stocks, 90% of their stocks, shares in the, 90% of the stocks in the tech sector are above the 50-day moving average. But they've been in the lead. Right? I point this out to you every now and then because I want you to know like who's in the lead and who's staying there. This is a rather pricey area of the market. These stocks are in uptrends, maybe more mature through their overall cycle, at least in the short term. And so you look at that and you go, all right, I understand why there's so many stocks above the 50-day here. That's the blue line, by the way. You look at that and you say, I understand that. Markets are doing well, tech stocks are doing well in general, so that makes sense. But why is the basic materials in that category? That doesn't look the same, not the same pattern, right? Rather interesting. I don't know. It's a fun study. On the downside, you got energy. That is your weakest area there. Least amount of stocks above the 50-day. Utilities, we already pointed that out. Those are that's a sector that's just pulling back. So at the beginning stages, why do I do that? Beginning stages of pulling back in your REITs. We'll use FREL for that. Also starting to chop around, which means more stocks. See how it's just hovering right there by the 50-day? More stocks in that sector are doing the exact same thing. Some are actually pretty nasty looking, but you catching my drift? You get what I'm saying there. You got 28 new 52-week highs today, and almost half of those stocks that hit highs today turn around and went down, right? Equifax is one that comes to memory here. Is that today? Yeah, Equifax. So here's my example of this, right? It pops up there to new highs, makes the radar. You go, new 52-week highs, completely reverses course and trades lower. If you ask me, I think they deserve it, right? This sort of I don't like this company very much. But so anyways, you got a little bit of a pullback there during the day, which starts to make you think, maybe that's not the strongest 52-week high that I could be a part of. Well, unfortunately, a lot of those 52-week highs, actually half of them today, started to reverse after hitting highs. Also, because they're a little bit extended. These have all had great moves. You had AMAC, CLAC, a lot of the semiconductors just starting to pull back. So it doesn't mean that there's anything real negative going on. It means, hey, these have been good moves. You got Visa in an uptrend, hit 52-week highs, took a break, just a weak day, right? So we don't look at this and panic. We look at this and say, well, that makes sense. What goes up's got to take a little bit of a break. Still a list of very, very strong stocks. In general, zoom out, see this big pattern here. We just look day to day because I'm here, I'm happy to help and everything. But the big pattern overall for names like this, still very strong in an uptrend, looking really good. You know what doesn't look good? Southwestern Energy, new 52-week lows there as well. That is running faster to zero than I've seen a stock do in quite some time. So still very weak, 8% on the day. I'm not saying it's going to zero, but can you kind of feel it? And then Cimarex, I've been pointing this one out. Those were also 52-week lows on the day. There were only 4 of them in general. All right, moving on to Netflix. We've been pointing out sort of the stats on this one. Netflix lost 8 days in a row. So on that 8th day, we said, hey, you know what? There's 5 other times that's happened. And only one time in history did it finish lower. It was only by 4%. And that's because it was down 11 days in a row. So what happens after the stock falls 8 days in a row? The average bounce is about 12%. Well, since we've fallen 8 days, we are now about halfway back, right? So the stats are playing out on this one. I've been pointing it out every day, just not to tell you what to do, but just to say, hey, this isn't really important. It doesn't really matter what your opinion is on the stock. What does the stock do? What's the statistical probabilities here, right? Based on history. I get it, it's based on history, but still. Anyways, a week later, well, we're 3 days in now. We got about half of the 12% that is sort of the average return. So looking good there. 1 month later, you're looking at 16%. 3 months later, it is positive every single time, meaning it's positive from the 8th day there, right? Not positive like, new highs or anything. Anyways, just thought I'd point that out there. All right, Tesla. We talked about this yesterday. What do they got to do, man? I saw, by the way, that his boring company, they raised another like 150 million or something. That's crazy. But anyway, stock down 13% today. They're delivering cars left and right. They can't just seem to squeeze out a profit. The one benefit there was, if you look at their free cash flow, that stuck out to me. I put it down earlier this morning. $614 million free cash flow versus $236 that we're used to seeing there. Okay, that's a bright spot. If you have to, you got, look for the positive, right? Anyways, they lost $1.12 a share. They were expected to lose 31 cents. Whoa. Whoa, whoa. Ford also lower on the day. So Ford missed on earnings, blamed it on China. We talked about that yesterday, down 8%. Airlines were down today. Actually, I think Southwest finished positive, but American Airlines lost 8% on earnings, and they also said they expect that the 737 MAX grounding is going to be about $400 million at this point. That's the cost that they're sort of expecting there. That's no chump change there. Southwest Airlines was also negative on the day. It did finish a little bit positive. Small beat on earnings there. Nothing to really get excited about. Boeing, that's 3 days lower for Boeing. The CEO commented today about, wow, we're pretty much just going to have to prepare ourselves to stop production. Yesterday, they said we may have to think about it. Today, they said we're going to have to prepare for it. So, wow. So you got 3.7% on the day. Now starting to get into short-term oversold position there. Yeah. So I think I've covered that one. And then the last little kind of funny news of the day, Bernie Madoff asked President Trump to essentially release him. He said, I'd like you to reduce my sentence to a point where I'm able to just walk away and get out of jail. He didn't ask for a pardon. He asked for his sentence to be reduced, which would essentially allow him to be released. What do you think the probability of that is? Old President Trump tweeting out, go ahead, Bernie. We'll see you later. Hershey looked good today. They beat on earnings. Revenue was good. Guidance was good. Hit new highs on that one. That was one of your 52-week highs today. PayPal did in fact take that punch today. It was down 5%. Held up the 50-day moving average. So if that's something you like to look at, that's all good there. I know some of you, or one of you, is in this 3M. That was a teaser today, huh? Old 3M started higher, was looking all good. You had to be quick on it, though. That sold off the rest of the day. Closed in the red by just a little bit. They had earnings as well. Beat on earnings. Revenues were just okay. And guidance, they basically left the same. So no fireworks there. The initial response was a little bit of an overreaction. And Raytheon finished higher as well. Raytheon 4.5% and hinting at making those new highs. If you have questions, I'm more than willing to try and take a chance at answering those questions. Otherwise, we will wrap it up here. I appreciate you watching. Looks like the whole world of autos are down. Yeah, and bad news out of Nissan as well. Well, not bad news, really. I mean, they're going to do some cost cutting there. 12,000 jobs, I believe they're cutting. I put it in the scroller for you down below. Jay bought some Boeing on the dip. Yeah. You like it there? You like stuff when it sells off? Man after my own heart. Boeing single-handedly ruined your Guess the Dow. Oh, man. Well, hopefully it recovers for you. You got one more day. Maybe a little bounce in Boeing today. AbbVie is reporting earnings tomorrow, expecting $2.21 a share. We'll see. That's first thing tomorrow morning. I've gotten a few questions on AbbVie. I'm sorry, I don't look at this area here, but earnings ought to be pretty exciting. That stock is rather beaten down, so those of you that are into that, let's hope for the best. Long-term chart of what, Mr. Share Academy or Miss Share Academy? Parker says you're about 30% down on Malibu boats. Yeah, that's a tough one. Malibu boats, the small cap's kind of been beaten up there. Should you sell off now or hold until it recoups some of the share price? So that's a tough one to answer because I don't know, what portion of your portfolio that is, just a little position. I own it. I got a little piece of that, but it's so small. I think it's like 2.43%. It's fine, for something like that. Now, if you either worked for them or you got a tip from a friend or something and it got you excited and you dove into that thing and you just decided you were going to be aggressive and buy it, that's a different story. You got to have a line in the sand. There's got to be a line in the sand for especially these small caps like that. Yep. You're very welcome, entrepreneur. Allergan, I wouldn't follow that one. I don't follow that space right there. Yeah. Beyond Meat's hit new highs as well. Yeah. You got it. I love it. You going to do the August preview to expect tonight? No, tonight we're going to do, for our customers, our class is going to be on the sort of little tricks and things. Really just one simple thing I want everybody to keep in mind. If you own company stock inside of a 401k, before you roll it over. I'm going to give you the heads up, little part of the tax code there that almost everybody misses. And unfortunately, once you miss it, you can't go back and fix it. So I want to help you guys out with that. It'll be a rather quick class, and of course, I'll stick around for as many questions as you guys have there. Should you have a cash position when the stock market is down? There's nothing wrong with that. I mean, I know people like that concept. I'm more of a consistent, just invest long-term, just invest. When the markets fall, if you can step up that consistent investment and go a little bit more, that's what I like to do. But I can't blame somebody for saying, hey, I got so much in my account, I'm just going to hold off for a while. When the markets fall, I'll get excited and dive back in. Yeah. Thoughts on private prison REITs after beating down in the new... I actually have not seen that. That is like zooming into a sector. I give you that. I wouldn't be a good... wouldn't be the right guy to ask about that. Entrepreneur says, can you educate on hedging insurance to protect your portfolio with put options? Long-term portfolios, I'm not a fan of doing that. It's proven to be more costly in the long run if you're a short-term guy, or you're running a hedge fund, or you have to report to people every month, you have investors or whatever. That's a different story. You may be good, you have a timing sort of connection with the market. I understand that for that, but for long-term investors, is there really a need to do that, to pay for that? Couldn't you just go with like a low-vol product or something that doesn't have a carrying cost associated to it? So that one's... Again, that's I get it. It's a short answer to a broad question. Are you confident that the feds will do a 50 basis point cut? No, absolutely not. Less than a 24% chance that they will cut 50 basis points. And I don't know. After today, you kind of, if they didn't cut, you kind of got that little hint. Yeah. World Wrestling, right? That's sort of a good stock right there. I mean, that's had a great run over the last 5-10 years or so. I mean, you look back at that, the performance of that one's got a lot of attention. Since then, it's kind of like the overall stock market, sitting at these sort of highs, just chopping back and forth. That's normal volatility to be expected after such a strong move. That was one of the hot stocks for a while there. I mean, it's been a while since I've looked at it, but you would say it's out of favor at the moment. So is there really a reason to go diving in unless you like what happened today? You're sort of bottom picking. There you go, that stock's falling out of favor. It got a little pricey from a fundamental standpoint, and it's all right. Eric, finally got your towel, man. I love it. You know how many times we got that towel sent back to us? I have packages just sitting here with Eric's name on it and just returned. Finally got it right. I love it, man. Enjoy. Hopefully you don't need it for a while. Matthew's open an account just to get access to private classes. I wish I could do something like somehow make them public or charge $1 and let everybody in. The only reason I have to make them private is because of what we talk about. It has nothing to do with any sort of trick or monetary concern or anything. I'm just not allowed to say the same things publicly that I can to customers. So that part's been made very clear to me. Sorry if I missed a few of your questions there. Any of the semiconductor questions you guys are asking, they've had a great run. In the short term, you expect to see them pull back. Look away for a few days, essentially. If you're a long-term investor, you've been through this, right? It's going to have its little ups and downs. This would be one where it's sort of obvious it's going to have a little bit of chop there in the short term. Mr. Andrew, I know who that is. Every customer that wants a towel is more than welcome to have a towel. I know you are one, so yeah, send support@Jazz Wealth an email. We'll get it out to you. Also, make sure your address in your account is correct, because that's where we're going to send it to. Danny, so the question is, why is the stock market so dependent on rate cuts, right? And the answer to that is, it's not so much that it's a rate cut, it's that it's an event, right? It is the next event for the market to look forward to. The markets move in the short term based on events. It could be earnings, it could be what Trump tweets, it could be what Bernie Sanders says that moves healthcare, it really could be anything. Any known event, such as GDP numbers coming out tomorrow, that'll have an effect on the market. The market's always looking forward to the next piece of data. And so because of that, that's why you see this little increased volatility, this concern, sometimes a pause where everything just stops. Fed announcements are a great one there. And so it's not so much that we're looking at the Fed. I understand it's a very important one. It has an effect on the economy, everything like that. It also sets the tone for the economy. But it's more so the event. Not knowing what's about to happen causes investors to make decisions in the short term. The next event that comes up beyond this, maybe is the next week is a busy week for earnings season. So it's just sort of an ongoing thing. That's just what we're focused on now because we have a definite date that it's going to happen. And so hopefully that answers your questions. How good are the towels? I keep mine very close. There you go. I keep mine very, very close here. Metals in general, so we talked about silver when it had its little blow-off top there looking, I don't want to say blow-off top, but had its little pop there, a little extended in the short term. Those have been since pulling back, been having more volatility. I saw gold miners pull back a little bit today. If you just want to look at like the GDX, just great moves in the short term. You attracted a lot of retail investors that said, ooh, goody, something's moving, and they bought it, and now it's starting to pull back. So all of this action in here is just people taking profits or realizing maybe they bought the top, not looking so good. So in the short term, you got a bunch of chop, very much like Bitcoin. We walked you right through the Bitcoin thing to say like, yeah, it's exciting that it blasted off like that, but it went too far too fast. And so you see Bitcoin just hovering right around that 10,000 area. Yep. Doesn't a rate cut mean cheaper money and thus more share buybacks? Yeah, I mean, is there much room left? Have we not bought back all the shares that companies can buy back? I know that's a whole different argument there, but it could possibly mean that. Yep, the continued buybacks. They tried to make that, I know the Democrats tried to make that part of their, you notice how that faded away? They tried to make that one of the issues that they were going to run on. Nobody really bought. Nobody cared. You didn't fire up the general public. They dropped it. You see how fast they dropped it? I have a feeling they'll test it again if rates stay low. Dustin, apart from volatility, any other disadvantages, arguments against using leveraged ETFs? Yeah, it's cost. Nobody sees the cost. It costs you a lot of money. There's a daily decay in these leveraged ETFs. They are not meant to be bought and held. And it's so misleading because you can look at the chart and go, yeah, but if I bought it, here's where I would be. Not the case. They are just not the product to be investing in more than, I'll give it even 2 days. You got 2 days. Anything beyond that, if you're thinking, well, I want to be more in the S&P 500, then just buy twice as much of the S&P 500. Or I want to be like double down on tech sector. Well, then buy twice as much of the tech sector. You avoid the cost on that one, especially when things go sideways. Yep. Helcio, of course, sir. Support at Jazz Wealth. Let us know. Yeah, you're more than welcome. I don't know about the mug, though. You know, those are kind of heavy. AbbVie, yeah, I don't follow that one. There'll be earnings tomorrow. I'll cover it for you guys, but it's not my best sector. I don't focus on that. If you had to pick one sector to focus on right now, which would it be? Financials. If I had to pick one sector to focus on, notice how I didn't say to buy or to sell. Neither did I say to buy or sell. I said to focus on. If I had to focus on one sector, I'd be focused on financials. Ta-da! I didn't get in trouble. All right, there you go. So we'll wrap it up there. If you're one of our customers, couple hours, we'll be back here 8 o'clock tonight. You should have the email in your inbox. If not, email support at Jazz Wealth. We'll send you the link, but we'll get started right at 8 o'clock. Short class today, but if you have other questions, of course, I can answer any question you have. I'll stay as long as you guys want, and we'll see you later. Back to work for me. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.